Good morning, everyone. Happy Friday. Let's get right into these stock charts. If you're new to the channel, this channel is all about swing trading. I don't do a whole lot of day trading, although, I do like to throw out trade ideas. And every idea that I throw out is just that. It's just an idea. It's my opinion. But I base it off of technical analysis. So let's get right into it and look at these charts. It's a morning video right now. And if a lot of the time, the morning read is important. It's oftentimes the most important because that's when institutions are moving money around, and you want to be on the side of the institutions. So if you see money being moved around in the morning, you want to make sure to take that into your consideration when looking at a stock or an ETF. So I'm going to start off here with the dollar. We're going to look at some other sectors. I see some things moving around, and there's some trade ideas in this video, so you want to hang out, watch the video. All right, DXY. DXY looks like it's getting stronger. The dollar looks like it's getting stronger. Looks like we're holding support, and if the dollar moves up, stocks should move down. What I've noticed recently is the stock market, the Qs, the FANG stocks, they've been moving up on when the dollar's been moving down. So a lot of the movement higher in the stock market has been predicated on a lower dollar. And so if that turns out that the dollar wants to move higher, stocks should move down. So here's what I see in the DXY, the dollar ETF or dollar index. Look, you had this base of support right here on the hourly chart sitting right around 92.63. We broke down this week. Here's the breakdown right here. So at this moment in time, when you were breaking down right here, it looked like all is clear. We're moving lower. Dollar is going to continue to sell off, and stocks probably will continue to move higher on a devalued dollar. But all of a sudden, it just stopped short. And then when the Fed came out with their announcement, it popped back up above that support line. So that created a bear trap. Anybody who took the breakdown in the dollar, was trapped basically. And so it was a trick, and we broke higher. Then yesterday, you can see we sold back down to that support. If I move this over right there, just barely undercut it, and sure enough, popped it right back up impulsively too. You see the move higher, it's pretty impulsive. It's just kind of straight up. So at this point, we're making lower highs and higher highs. So you got a low, you got a higher low, a high, and now a higher high. So we're starting to uptrend. And now this is just an hourly chart, so it's short term. But what I see here, everything starts short term and works its way to, a swing trade essentially. So I see I see this holding support. I see a bear trap. I think we're running up for a back test of this 95. Where do I get that? Well, go to the weekly and roll out. And here's your longer term trend in the dollar. There's your breakdown right there. So I think that breakdown will probably stick, but I think we're going to run up into a back test around 95, somewhere right in there. So that should be short-term bearish for gold. Let's look at gold. And gold, if I go to the daily, gold's kind of just consolidating. It broke down. It's just consolidating. I think we're heading down to this level of 1790. Where do I get that? I get back that from back in the 2011 to 13 highs. That was resistance. That held as resistance 3 times. This pop right here was just the blow off top. Only, it was just, there was no reactions up here. It just overshot it, came back down, and then we started to hold resistance 1, 2, 3. So as you zoom in, you overshot it here. We broke above it, held it, moved higher, and now we're coming back in for a back test. That's what it looks like. Okay, let's look into the stock market, look at some trade ideas here. So let's go to the hourly on the NASDAQ futures. So here's what we got going on, what I see. We've got this trend line. Here's the futures. We got this upward trend line we've been in. We broke down, did a back test and recovered, but you can see the recovery for the most part in this was in the after hours. I've now changed my charts to show the after hours. So here's some after hours price action of the recovery, and then they sold it back down, ran up, did a back test. So 2 back tests, we're probably going to roll over here, but again, we have to continue to watch it. Same with ES. You can see we broke down, back test, broke down. Kind of back testing. Maybe we're going to hold. Maybe we're going to fail. I don't quite know. What I've decided to do, because the Qs and the FANGs have been so strong, they've just been this relentless momentum trade that doesn't want to give up. Everybody's piling into there. So I've started to look more at the IWM. So what I did is I actually took a short on the IWM. Here's the break. Here's the level that we're at, 156.20. And I was watching that. We had this small uptrend. We had 156.20. I was looking for a break. We broke that. Yesterday, they just kind of held it right there, and we're now getting continuation. So the IWM doesn't have the FANGs in it. So it's showing the reality of the market, the real weakness in the market, which I think is there. But that's being hidden in the S&P 500 and the triple Qs. That's being hidden by the five FANG stocks and Tesla as well, because Tesla's been on a monster run. So I'm starting to shift more of my short energy on the index trades to the indexes that don't have the FANGs. And what I'll do is, I think there's a lot of money to be made shorting the tech sector, but you have to wait for the breakdown in the sell signals, and we just don't have them. We're getting the breakdown in the sell signals in the other indices that don't have the FANGs, but not in the tech sector. So let's look at that. Here's the Qs. And, we'll start out with the weekly chart here. Weekly chart, big price channel right here, going back to 2009. So here's your bull market in Qs, which has not really been broken. We're still in a bull market in tech. It broke twice, actually, right here and here, but both times, this is when the Fed saved the market. And so this is what the Fed has been doing. Every time there's a breakdown of the bull market, they're coming out with QE. They did it here and here, and interest rates. But they don't have interest rates anymore, so now they only have QE. So if we get a breakdown now and they're going to continue, that's when the dollar's really going to break, because there's no interest rates, there's only QE. Or perhaps they let it actually deflate a little bit. So we're well above this. We've spent several weeks up above the top of this price channel. I think we're going to fail, and come back down into this price channel. That's pretty common when you're outside of a price channel like this. Usually you're going to revert back to the price channel. And so I think that's what's going to happen. But, we don't have that breakdown yet. So we're looking for a breakdown on the daily and the hourly chart of this trend line right here. You can see just nice, clean trend line, very programmatic. And so, when this starts to break down, we'll come down and tag it and then when we break that, that's your sell signal. And so got to wait for that. S&P 500, just pushing all-time highs, kind of consolidating up here at the all-time highs. We've popped it a couple times, but we're still just right there at the all-time highs. It's still struggling with that level. So it's possible the S&P 500, makes a quick little break higher. Now that we've hit these all-time highs, when everyone's looking at a level, like the all-time highs is what everyone's looking at, usually you're either going to undershoot it or overshoot it. We're right on it, so we're not undershooting it. So maybe we overshoot it slightly and then we roll over. We'll have to watch to see what happens here. If I go to the hourly chart, you can see there's your all-time highs. Now we did have this price channel right here that we broke, but it wasn't that impulsive. Here's your break, but then we just did this back test and started grinding higher. So I think we're just in this flat consolidation pattern right now where we have to, we need some sort of a sell signal. And ultimately, the SPY is not going to break down without Qs and tech. So you want to continue to watch that tech sector. Volume, continues to just be pretty weak. Maybe we'll get a little more volume today, but we've had really low volume up in here. And you can see these candles. They've been really small bodies, or really short ranges from where we open and close. A lot of indecision, basically, is what that's saying. So it's kind of a battleground up here, starting to get a little bit bigger candles and some volatility expansion. So we'll watch that. Speaking of volatility, I've been looking at that. That one is UVXY is the one that we've been looking at. And, there might be a trade here to the long side coming up. I haven't charted it completely, but you've got some, it looks like we're kind of wedging like this. And, want to see a break. I'd like to see it. You want to see that nice impulsive breakout. And that will come most likely with a big, with a breakdown in the indices. So UVXY, I'll be watching that one a little closer because these, when this runs, You know, it's nice to sprinkle a little bit of, you know, a little bit of beta or alpha or whatever on this to get, you know, nice moves. I don't take large positions in these volatility indexes, but when they break out, they can run. Here's the BND, the bond market, edging higher slightly. So maybe we're flagging. It's possible. This could be your flag pole. Here's your flag right there. And then a break of that flag would put us, you know, would basically give us a measured move, you know, somewhere down to there, around 87.5 or so. That's kind of rough, but that's kind of how you measure out those measured moves. And so maybe that's what's happening, or maybe this is just a dip and they're going to ramp it back up. I'm not exactly sure. With the dollar moving higher, tells me that bonds are probably going to move higher, and this is a dip. So we'll have to continue to see how that plays out in the dollar. Okay, trade idea, XLV. This is breaking down, and it's not impulsive yet, but it is continuing to break down. So let's look here at the hourly chart. This is your healthcare sector. Bearish rising wedge right here. So here's what we got going on. I guess we'll look at the bigger picture. Here's your March break or February breakdown. Here's your kickback, you know, recovery basically. Then we just went sideways for the longest time, and then slowly started to wedge higher, inch our way higher. Recently, you can see it's kind of stalled out up here. We made the move higher, and then it's just gone sideways and slightly higher, creating this bearish rising wedge. So here's your bearish rising wedge, and here is your breakdown. You broke down, back test, rolling over. The rest of the, you know, I'm not seeing breakdowns in other, like the Qs and SPY and stuff, so maybe this is going to stop short and do a back test. And again, this market has loved to do back tests. When it breaks trends, it loves to do back tests recently. I just see it across the board in individual stocks and ETFs. So maybe that's what it wants to do, but it's bearish at this point because we broke support. Now, this is an hourly support, so it's not a major support. But you can see if I look at the daily, there's your daily breakdown. So maybe do a back test and then roll over. But I think we're heading down to the target would be about 97. And that's the trade idea on that one. So a breakdown from here, that's about a 8.5% gain, depending on if we back test or not. XLF. Now, if there's going to be any kind of recovery job, it's got to be in this XLF. XLF, although it's not as heavily weighted in the S&P 500, the bank stocks are really the lifeblood of the economy and through lending. So the banks can't go one way down and the rest of the market goes up and expect that to last. Yeah, you can have a divergence from, you know, banks going down and tech going up, but it's not going to last. So we want to watch this. And the banks have broken down. Here's the daily chart in the XLF, the banking ETF. You can see here, nice uptrend. And as I zoom in, here's your breakdown. So you broke, gap down, just going sideways to down basically. So let's go to the hourly. See that? It's just kind of plateauing. So maybe we do a back test and they save it. Maybe they don't. But if they don't, then we'll start to look for breakdowns in the other parts of the market. Look at the daily, look for volume. So the one thing is the breakdown, there's no volume. It's not an impulsive breakdown. So to me, it's a non-confirming breakdown. That's why I don't trust it. I'm not short this. I don't know if this is going to stick. So what I'm looking for is some sort of impulsive breakdown with volume, whether that's a big gap down and then a gap down and then a move lower. Look for the volume to come in. That will give you the nice solid sell signal that you're looking for. And then we can start to look at, breakdowns happening across the board. Could be a leading indicator. Much like the IWM, is starting to break down. There's no volume though. So again, the breakdowns that are happening are not happening with volume. Here's XLV, no volume. Here's a semiconductor ETF, SOXX. And this one's starting to break down too. We've got some negative divergence. Here's your daily chart. Here's your uptrend line. Now this could be adjusted slightly. There's several ways I can make this trend line. And we're starting to break down, but again, not impulsive. So here's a breakdown, just going sideways, kind of starting to work its way higher. So I don't know. It's not impulsive, so I don't trust it. And anytime you have a breakout or a breakdown on low volume, it's non-confirming, and I never take those moves. I always look for fake out on those moves. So maybe that's what this is. These aren't going to go, this isn't going to go anywhere unless FANG starts to show some weakness as well. Someone asked me about Zoom, so we'll cover this. Zoom's bullish. There's literally nothing bearish right now. There's nothing to short. I'm not going to go long this thing. I don't trade. I don't go long stocks that are, starting to approach the overbought area with negative divergence. You can see here, pretty clean negative divergence, just extending that divergence right now. And so momentum is fading, although price continues to move higher. Zoom did have a bear trap right here, and I took that short. I luckily wasn't trapped too bad on that one, but it did break down. So here's your trend line in Zoom. And as I zoom in, here's your bear, basically ended up being a bear trap, but it was a breakdown, but then they popped it and recovered it. So that created a bear trap. I was able to make a little bit of profit actually on this trade. On the initial move, I sold most of my position and kept some, and then had to, I stopped out and took a loss on the remaining position. So all in all, just a wash, but bear trap. So still bullish. You got to see a breakdown and you need to see confirmation, and we just didn't see that. So it's bullish as of right now. Here's one, KHC. So I haven't covered this for a couple days, but I was long this stock, no longer long, but I was long it. We saw it pop up above this line right here, and this is your gap. So see the gap, big gap all the way back here in 2019. And that's a trade. When we enter the gap, it should fill. We started to enter right here. Here's your entry right there, but it wasn't impulsive. And so I noticed that it wasn't able to really hold that. And then when it failed and closed back below the gap, that was my sign to exit that. So small profit on that one. Now we're rolling over. So looking for this to tag this 33.56, and that's your near-term support. And I'll be looking to buy it back right around there. Okay, sorry, I had to take a quick break. Here's PayPal. You can see here, possible short on this one. Here's the March lows, and you had a reaction right here. And then we can get rid of this line. There was a trend here; it was holding, but I don't think it's relevant anymore. So you've got a reaction here, and as we move up, another reaction right there, and then we get into the breakdown area. So we had a reaction, we were holding that, and then we broke down, but we didn't break down impulsively. So then what it wanted to do was back test. So it did a back test. Now it looks like it's starting to roll over. So if this holds and starts to roll over, that would be a breakdown and a back test. And we would, should continue to roll over. Here's a gap right here. And also it was resistance right here. So a logical target is gap fill somewhere around 184.50, 185, something like that. And that's a trade idea. Just my opinion, not advice. Here's a silver miner, PAAS. I am short this stock. I got short on the breakdown up here. So this one, here's your March lows all the way down here. The tails came down and tagged that. Then you had lots of reactions up along, creating the trend line. Then you broke. Nice impulsive breakdown right there. It chopped around a little bit, kept chopping around, and sometimes you see that when you start to break a trend line or you start to see volatility, you'll see the breakdown, then the recovery, then a breakdown, then a recovery. That's volatility. It shows you that the trend that was intact is changing. Something's changing. And so you'll see volatility increase. But nice impulsive breakdown. Then we continued to drift, and then we get the gap lower. So that's a nice confirmation. Then you get the back test, which filled the gap. Perfect area. Very technically solid trading action here, and then it held the gap right there. That was resistance. We continue to roll over. So I'm just looking at this one heading down to about 30.50 and about 26 bucks right in that area. NVDA could be setting up for a nice short opportunity. Here's your March lows right here in NVIDIA. Then it just created this trend line here, reaction here, reaction here. Then it broke. It actually broke back here in July, and it's been back testing ever since, creating, just looks like it's continuing an uptrend. And obviously the trend is still up, but it's below the primary trend that it created back in the March lows. So you break down, back test, back test, back test. It's done a lot of back testing. It's doing it again today. One of these back tests most likely will fail and will start to move lower. Got a gap right here at 462. So that's an obvious area of support. So if we start to break down, I'd expect us to come down and get a reaction at 462 and then, possibly head lower. So, you could add to this or start a short, but the problem is it continues to back test. So it could continue to do this and you'd be down quite a bit if you started adding in these back test areas. So what I'm probably looking for is a little bit more impulsive breakdown price action on this in order to confirm that this wants to roll over. But these things have really gone up quite a bit. So if it wants to roll over, there's the potential for a nice move down. So we'll just watch this. There's no real trade setup. I mean, no trigger here yet for me at least, but a possible trade setup. And we'll wrap up with Tesla. This one here is a definite short at some point in time, and I will be shorting this stock. I just don't know where. Right now, there's nothing to do. There's no, I'm not going to just jump in and short this thing here because I have no, there's no sell signal. There's no reversal candles. There's really nothing to short against. However, this thing has definitely gone beyond its skis, basically. What do I see in this one? Well, here's your March lows. Potential uptrend right here where it broke and we've been back testing. So you can see we're looking at a daily chart here. Trend was intact. Then we broke the trend but just drifted sideways and then impulsively ran up and did a back test. And it looks like it's trying to do another back test. So this could obviously go a lot higher. The momentum is clearly just ripping to the upside. For the most part, if you look at the weekly, this thing's just gone parabolic, just straight up. So maybe it wants to run up to 24, 2,500, something like that, do another back test, and then sell off. We need to wait for some sort of a signal. But, we'll just continue to watch this and see how it plays out. It does have negative divergence on the daily chart. You can see this peak right here, and we made a lower, this high, there was less participation right here. And even has it there on the PPO. You can see right here. So negative divergence is intact, and yet it continues to make higher highs. So what that says is that a trend reversal is coming soon, although it's not there and the trend is still up. So we wait for the signal, the signal that tells us the trend is now changing. Until we get that, it's most likely going to continue higher. So for me, I'm definitely not just jumping into this thing. This is the kind of stock that you really get hurt if you FOMO, if you didn't buy it down at the lows and you jump in now thinking it's just never going to stop going up. This is the stock that really kind of hurts you. And so I think there's more opportunity to wait for the signal and then short this thing. So that's what I'm going to be doing. I'm going to wrap it up there. Let me know if I missed something. Oh, you know what? One final thing I want to cover. Someone asked me to. SLV. Let's go ahead and cover this. SLV. All right. So the same thing as gold. I'm basically looking at shorting this thing. I'm shorting the silver miner PAS. Look, island cluster reversal right here. So there's your island cluster with a sell signal. You had follow through to the downside. Kickback rally. If I go to the hourly here, you can see it a little clearer. Here's your island top cluster reversal. You got the sell-off, the kickback rally, which came right up into the island, right in there, and then we're continuing to move lower. So I see us going lower down to this 2150, and then possibly 2050. We've got a couple gaps right here. 1978 and 1848. So I think 1848 is probably about as low as this thing would go. You could probably make a trend line that's about right. Yeah, it's about right there. That's kind of your longer term bull market right there in silver, it looks like. So this thing could easily come down and run down, maybe undercut, fill these gaps, and then bounce up and start to move higher. So as of right now, I think minimum, I think we're going to hit this 2142. That's SLB. All right, guys, thank you. Appreciate it, and catch you guys.